Sudeep, to stay with us, got to address management as well. And VP Nandakumar, the MD and CEO at Manappuram Finance Joins is on the show right now. Mr. Nandakumar, afternoon, the RBI stated that the bank exposure to all NBFCs now should be assigned risk weights as per their credit rating. How positive would you say this is for NBFCs, and do you see borrowing costs coming down for rated NBFCs?
Yes, two important things. One, the policy rate, yes, repo rate, there is a reduction by 0.25%, which should lead to some reduction in interest rate, which should be good, which will be maybe available to NBFCs when we borrow from the banks, and that also can lead to some reduction in the market interest rates. The second part, which was the main question from your side, is there is harmonization now. What they propose is the harmonization amongst the major sectors like investment companies, loan companies and asset finance companies, which constitute 99% of the sector. So the benefit is coming to the loan companies. Manappuram also is a loan company, but with a harmonization, because the risk weight when the banks lend to a loan company, for the bank they had the risk weight of 100%. Now it is brought down to according to their rating. AAA rating 20%, AA rating 30%, and A rating it is 50%, etc.
As you said, you are AA rated. What rate would you borrow now? By how much do you see borrowing costs come down due to the reduced risk weights?
See, our borrowing rate has gone up to 9.67%. That is the current rate. But already the rates have started cooling down, especially short-term borrowings. Post ILFS issue, the rates of CP rates have gone to as high as 9.5%, 9.75%. Now this has been down to 8%, and 25% of our portfolio is already is CP, so that benefit is already available. So the rates are expected to come down. With this, the 30% risk weight or the lending bank, when according to the rating of the borrower company, then that could lead to further reduction. So overall, we expect the rates to, the average rates to move down by 50 basis points in 1 or 2 quarters time.
Would you pass lower borrowing costs to borrowers by way of lower yields, and hence, overall see an impact on margins?
Margins will remain protected, because when the rates were up, we have hiked our lending rate to that extent. Now when the rates are down, we will down our lending rate. So there will not be any impact on the NIM.
Right. And what would you say would be your overall growth strategy for, say, the next 1 to 2 years? Any plans of selling stake?
See, our overall performance target is a growth rate of 20% and an ROE of 20%. So, with this view, we are working out our business plans for the next year. So, in this 20%, I hope the gold may have a stake of around 10%, and others will overgrow, so that the percentage between the share between gold and non-gold may be tilted in favor of non-gold. So regarding the second part of the question, stake sale, there is no plan. There are no plans for stake sale, not only from the parent company but also subsidiaries. But we may raise, we have the plans to raise around $100 million from in our subsidiary Ashirwad Microfinance. That we plan to raise that during the first quarter. This will be through PE route.
Okay, great to have you on the show. Thanks so much for taking the time out and speaking with us today. Let's move on. Let's take a look at what's happening with the market. Status quo actually, we worsened further, sub the 10,950 mark.